Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It's Wednesday morning, October 23, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. The equities finished mildly lower, with the S&P 500 seeing its first back-to-back drop in 6 weeks since early September. The S&P 500 was little changed as it fell 0.05% to 5,851. Similarly, the Dow Jones Industrial Average was little changed too as it lost 7 points or less than 0.1%. Meanwhile, the tech-heavy Nasdaq Composite rose 0.18% to 18,573. Rising bond yields have provided resistance to stocks, even as equities have pushed to record highs. The yield on benchmark 10-year Treasury yields ended Tuesday at 4.204%, up from 4.18% on Monday and 3.62% in mid-September. Investors were put off by a steep jump in the US 10-year Treasury yield as they rose above 4.2% for the first time since July, which pushed the S&P 500 to end lower for a second session as traders weighed mixed results on a busy day of corporate earnings. This rise in the yield indicates that the traders have pared back hopes for a steep easing cycle from the Federal Reserve. Commentary from Fed officials this week calling for gradual and modest cuts following a streak of hot economic data triggered investors to rethink their expectations. Higher rate expectations are often a headwind for the equity market, at least in the short term. The indices paired the morning's steeper losses as traders poured over a bonanza of quarterly earnings from big companies. The bid up shares of Philip Morris International 10% to an all-time high after the cigarette maker's quarterly results, as well as those of General Motors and medical testing firm Quest Diagnostics, which added 9.8% and 6.9% respectively. Verizon Communications, 3M, paint maker Sherwin-Williams, and GE Aerospace sold off after disclosing their own quarterly results. Napa Auto Parts owner Genuine Parts crashed 21% in its worst day on record. A 600 billion exchange-traded fund tracking the S&P 500 (SPY) wavered after the close of regular trading. Texas Instruments Incorporated, the biggest maker of analog chips, gave a weak outlook even after topping estimates. Starbucks Corporation pulled guidance for 2025 after sales plunged for a third consecutive quarter. McDonald's Corporation plunged as its quarter pounders were linked to an E. coli outbreak in the US. As of late Tuesday, gold prices rose for the sixth consecutive session to a new all-time high. Futures for October delivery closed at $2,744 a troy ounce, up 33% this year. Gold prices rose for the sixth consecutive day to another record. Oil prices added 2.2%, benchmark US barrels settling at $72.09 apiece. The US dollar rose to a fresh 2.5-month high amid Fed rate cut expectations. The dollar index, which measures the dollar against a basket of currencies, including the yen and the euro, rose 0.13% to 104.09 after hitting 104.10, its highest since August 2. Overseas stocks mostly fell. Japan's Nikkei 225 fell 1.4%, while South Korea's Kospi Composite dropped 1.3%. Major European indexes also finished low. Key events this week: US existing home sales, Wednesday; Boeing, Tesla, Deutsche Bank earnings, Wednesday; Fed's Beige Book, Wednesday; US new home sales, jobless claims, S&P Global Manufacturing and Services PMI on Thursday; UPS, Barclays earnings, Thursday; US durable goods, University of Michigan consumer sentiments on Friday. That's it for today, folks. See you tomorrow morning. In the meantime, let us know in the comments section what are your thoughts for the market. Happy investing, stay inspired, and remember, it is all about money.